This week, even it's August, but it's a smooth transition to September. I don't know how you, but I'm already feeling this. It's a huge amount of work. Appeared, I don't know, Igor, how is on your side?
Same for us. A lot of upcoming projects, and it seems that business period is ramping up. Like a lot of requests, a lot of communication. We're looking forward to participate in some events in September. So Fintech Garden will take the place in Money 2020 Saudi Arabia. So if you're going to be there, come join us and say hi. I think, despite of being the summertime, we have pretty big news coming from United States. The first one is actually Visa is shutting down their open banking unit. And it's a long time discussion because several episodes ago we discussed that actually there is a ruling which is saying that potentially open banking data cannot be provided for free for the fintechs, which is boiling a lot of discussions. Is this the part of the regulation or not? Like, what do you think about that, Dumitru?
Visa is winding down its US open banking operations for several reasons. First is the fact that basically United States now is the battle between innovations and money. This is what was the topic we had with Igor before starting to record. Second thing is European Union. So they are switching from their focus and attention on open banking solutions and open banking business stream from United States. They're focusing it to LATAM region and Europe, or basically one biggest reason. European Union and plus European continent itself has a very strict and understandable and already established banking regulations and fintech regulations. LATAM region is very close to be like European Union or continental Europe, where all kind of regulations are already understandable and settled up. When the United States is having more, libertarian approach in this case, and libertarian not all the times means bad things. Here, the approach means mostly the situation is because the United States has a less regulated environment like European Union. For the business like Visa, rules are not clear, rules are not understandable. And that there's like different, legal processes on this topic. And Visa, I think, it's my personal opinion, Visa decided to just step back, say, guys, solve it out, sort it, and then we will see if to come back or not.
And just to add the context, Consumer Financial Protection Bureau in the United States requested additional description or information about the ruling that has been made this summer. And in a nutshell, the situation is that the court decided that actually the big banks, they are not required to provide the data for free. And open banking itself is a regulation, which means when you're opening an account, you're not just serviced through the application, but the data and your activity is subject for being exposed to the third parties. And I think that's a really good case when the technology is providing an ability to innovate, because we have a lot of business models based on that. Other companies, they can read your financial information, financial flow, they can do additional KYC, they can do scoring. And actually, it works well in European Union, despite of being more dramatic and more limited or more limitations in the regulations like PSD2, PSD3 for the banks. But it allows to innovate on other sectors like fintechs with the more business models. And United States seems to be coming into the Wild West mode with this regulation, because the regulation says one, then the ruling in the court saying another one. So we will see a lot of effects for this, especially for the Blade, because that's one of the biggest player of the open banking aggregation, and they don't have the transaction ability, which is possible with the PSD2, PSD3 in European Union, because you can initiate the payments through the open banking providers, which is not the case in the United States. And right now there is a huge issue with actually aggregating data for free, which means Blade will have to pay, and this final price anyway will be on shoulders of the customers. So huge one. Let's see how it will progress.
Yes, because Visa is so big, it's basically a very big message that even a big corporations, big company like Visa will choose to go maybe on smaller market like European Union or LATAM, if to compare it with the United States, but with more regulated or at least cleared rules, understandable path you have to do. And if we are speaking about European Union or Europe, here is the second news that Klarna, one of the biggest European-based company, buy now, pay later company, is next week, I think they will make the IPO. So they will go public. And there is currently their valuation is 14 billions. Well, it's less than it was 3 or 4 years ago, but it's already a very, very powerful sign and very, powerful sign that such companies that operate in buy now, pay later market can go public and will go public. What do you think about this?
I think that we see the fixing or updates to the private equity estimations because Klarna was valuated $45.6 billion back in June 2021 during the private fundraising round. And it means that people who are invested and companies and VCs who invested in Klarna, they've been valuating the total business as this high, but that's the reality. The markets are changing, and then actually going to IPO, it actually shows the real value. So we will see if the price goes up after this valuation because it gives the space to go up or go down. And why I think it's important because Klarna, despite of being Swedish company established in Sweden and competitive to European markets and European banks, because the buy now pay later is also overlapping with the open banking data because for evaluating customer and getting more information about their financial performance and allowing them without using the credit cards to do the credits or deferred payments or PNN. Actually, this data is used. It showed that this business model is pretty competitive and really good for the market. And good luck for the Klarna. Let's see how they will perform on the public markets.
Yes, if the IPO will pass well, it will be the biggest fintech listings in this year, European fintech listings in this year. It will be also a test. Are investors ready? So 45 billions 2021, now it's 14 billions only. So it will be a test if investors are ready to invest in such kind of opportunities and to invest in such kind of finance models like buy now, pay later. It will show us a lot of things. So next week, if we will be in time with this news, we will come, or in 2 weeks, we'll come back with a feedback by sure, because for me, this is a very interesting thing. I wish Klarna a lot of success and good luck in everything they're doing, because honestly, personal opinion, I think this product is super great. And buy now, pay later, I'm a huge fan of buy now, pay later. And I think this finance model, this business model has to extend. It has to develop, but we will see.
Okay, and coming back to United States, the third news that we selected for you today is about FedNow. That's a special real-time settlement system in United States. And actually, it shows the momentum growth in instant payments in Q2 in 2025. So what do you think about that?
We are in European Union or in European continent, we are spoiled with instant payments. We once in one of our podcast episode were speaking that in fintech, as much you go to the east, the banking or fintech products are better, better, and better. So I think United States is somehow the start of a traveling from west to east. I will be very honest, United States made a huge steps in improving the fintech and banking systems and usability of the products in the last years. So absolutely great steps were made. There is plenty of space in the room to develop it, but it was also a test. So FedNow basically proved one single thing. People want easy finance. Easy finance means easy transaction models, easy, not to send money today and expect that the receiver will receive it like in 2, 3, 5, 12 hours or even 24 hours. It proves that United States market, in the moment when they will full adapt the instant payments, they will have such a growth that European Union or European continent didn't have any kind of opportunity to have. So I'm very happy for United States companies who are using FedNow, who are using in their products this functionality and this feature. But instant payments, for us in Europe, it's something obvious. But in the United States, it proved that it can work, and everyone around the world, they want the money just to be quick and now.
And in this case, it's a competition with a private clearing network, which is called RTP. And actually, it's private sector instant payment networks.
RTP ACH had a big issue for the business cases, closing the settlements, closing the payroll profile or financial management. As you mentioned, you finish the week today, and instead of receiving your settlements for your activity online, for example, or wherever, today, now, because it's the end of the day, you have to wait until next Monday, next Tuesday, Wednesday, wherever. So exist in settlements, exists this logic of T+1, T+5, and so on. So in the States, this is very often thing. In Europe, we are more used with T0, and we know what does it mean. And for us, it's very good because we can build a very agile and very strong, good, and easy in the same time processes in financial management. So yeah, absolutely kudos. I'm sure that FedNow will be the leader of type of payments in next years. But yeah, let's see what will happen.